Hey, Bottom.
Hey man, how are you?
Hold on a second. Oh,
To fully vaccinate every frontline healthcare worker.
let's try that again. How you doing, man?
Good, how are you?
There you go. Hey,
Hi, Bottom.
Hey darling, how are you?
I'm good. How are you doing?
Good. You're both gonna be hiding behind this less than attractive face?
no, we're actually in my car, so you're gonna have to tolerate us.
Oh, what? You're in your car with, wait, is that a fake background or is that a real background?
That's I'm thinking about giving it a fake background, but
That's a
I can't.
very nice real background.
I don't have anything that resembles Uma Thurman laying on a bed.
Uh-huh.
Oh, whoa, no, that is a fake background.
Well, it's a very nice one. Hey Irene, how are you?
Hey, ooh, good. How's it going?
Good, good, good.
Had to turn my background off. I don't want my company name in the videos on YouTube.
Ooh la la. Right. And what is that? Oh, okay. And there he is, Ali. And how are you, my friend?
I'm good, thank you. How about yourself? I can't see you, so maybe it's my connection.
I don't know. Are you in the dark? It looks like you're kind of in the dark.
I'm in the dark completely about everything.
Yes, metaphorically, I know. So you're like set the scene. All right. Well, I think
I'm in a vehicle. My daughter's playing tennis.
Oh, okay. Hopefully she's not in the vehicle playing tennis, but all of that. So
I might try to. I might try to go to a because I can't see anybody, so I may try to go to a.
Go to audio, whatever
get
works.
a different.
Different connection.
All right, let me try to do something.
Okay. All right. Anyway, so I sent, I called the meeting crashing or running. I don't know if any of you saw the short description because it asked me to put one in, but I don't know if anyone saw it or where they would appear or any of that crap.
I missed it.
Okay. But it was basically, it's not a fear that just applies to young investors. It's the fear of, oh my God, when is the crash coming? When am I going to lose all of my money? That's the fear of a beginner who's in the market. The fear of a beginner who's not yet in the market is, oh my God, this thing's been running for so long. I should probably wait a little while until it crashes and then get in. And both of those are, as I said, if in the brief descriptions that no one saw, I said, if this is either one of you, you suck, and that's why you need to be on this call. Another thing that I also wanted to talk about is, dead money. What is dead money? What does it mean? How do I know when I have it? So the first thing is, the crash and the, is it crashing or is it running? The market right now, just so that no one has any confusion, is running. Okay. This market really, I've been doing this for a long time. This is unique. Okay. Now, what does that mean? Okay. Does that mean it's going to crash at any moment? And, and I should wait? I don't know. Does that mean it's running and I should get on it right now? I don't know. The only thing I do know is you need to be in it. You need to be in it more than you need to be doing anything else. Okay. I hear from a lot of people, yeah, man, I'm doing this research and all of that. And I'm like, research is for chumps, Of course, that's an oversimplification, but all of these things end up being, sort of paralyzing. The more research you do, the more you find out, the more you find out, the more you think, the more you think, the more options there are, on and on and on and on. Okay. The one thing you have to remember is No single one of the bets that you will place is big enough in the form that you place it to fuck up your life. Okay? They're all small bets. They can become huge chunks of money, but when they start out, they're all small bets. So that's how you kind of have to treat them. I need to, let me really dig deeper into this. For what? It's $2,000. It's $2,500. It's $3,000. Don't fucking get lost in the theory. The more you play, the more you trade, the more you'll see how stocks move. When you're in a position, you will definitely be following it, because that's when you need to pay attention. And because you'll be paying attention, you'll be processing that information a lot faster. You'll be very shocked by how much you can actually get out of a simple headline. Never mind the couple of bullet points that they usually put after that, preceding the general article. Don't be afraid. Don't paralyze yourself. Get in. Okay? I'm going to give you 4 quick examples of people who are in this group. There are only 12 people in this group, so 4 is a good chunk of them. Okay? One of them I started with about 6-7 months ago. He has a 7-figure chunk that he was already in the market with, but very safe stuff, slow and easies. And, he has a very nice job. He runs a law firm, blah, 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 all of that stuff. I gave away too much. Anyway, but he'd been doing it. And he very quickly caught on to the whole psychology of this that I, try to be the main of what I hope all of you will take away from all of this. So there was him, already a good amount of knowledge, ability to process information quickly and come to decisions. A second person is a person who processes information faster than anyone I have ever seen do it, and completely has very little concern with the repercussions of it. So just plows ahead, and sometimes even places the wrong trade. Like, hey, it's supposed to be a put. Oh, I bought a call instead. Shit happens. And I'm actually hoping that he gets his ass spanked, but the motherfucker ends up making money on the shit. So, I still beat him up a little bit and tell him, hey, that shouldn't have happened. You should have lost money. But because you're like born under a lucky star, but he plunges in. The trades that I put out and say, hey, not for you, he'll try to figure them out and go in on his own. So that's 2. Third person is really, really excited. Been in it super, super short period of time. Has spent a lot of the time in the theoretical, researching, kind of understanding, placing mental trades, all of that. I strong-armed her into getting into this. Gave it away on my birthday even. And, she put money in, and in one freaking month, 90%. That's insane. The crazy guy, by the way, has gotten, I think, a 55-60% return in about 4 months. And the big guy, the first guy, has gotten about 1.7 million return on a start of about 2.5 in about 7 or 8 months. Okay. The fourth person, the story of the third one, the end of it is she's totally excited. She sees the potential. She knows it's there. She knows she just needs to fucking do it. And that's where the story ends. Okay. She knows she really fucking needs to do it, but, and I'm going to move the money, and it's, all of these really, really good sound reasons. They got kids, husband, a lot of stuff, life, so much shit going on. Who the fuck cares? Who the fuck cares? At the end of the day, if you got no money and you're 80 years old and, all of that, You got to do what you got to do. Okay. The very last person started at the same exact day and has put in almost the exact same amount as the crazy impetuous guy. But he can't really be bothered. It's hard for him to get on these calls, all this stuff going on. In the grand scheme of things, he's busier than I am, but not as busy as some of you. And he's just like, not that into it. And that's fine too. Everyone is as into it as they can be. But, opportunity comes along. If you become aware of the opportunity and choose not to do something about it, to me, that's the greatest sin of all. Right now exists an opportunity potentially for the next several years for people to make disproportionate returns on their money. All you have to do is be slightly organized and have your shit together and have your money together. Okay. It's not about taking insane risks. It's not about, putting it all on black, or stupid shit like that. It's about discipline and organization and really putting this in the very high priority that it deserves. This can, I don't know how else to say it other than to point to people's returns that they've achieved in a short period of time, 2.5 to 4.2, 250, or like 200 to almost 350, 20 to 40, so it doesn't take a lot of money to make an impact. And the most important thing is not turning 20 into 40, but it's the empowerment that you feel from that, the understanding that you got from how you went from point A to point Z. And it had nothing to do with the tip or with whatever else. It had everything to do with you addressing your fears, putting them where they belong, understanding rational versus irrational, and always putting things in the context of the amount at risk. Okay? The amount at risk. Right now, with the exception of one person here, 1.5 people here, you're all placing small bets. And it has nothing to do with how much money you have that you could deploy. It has to do with this is new to you guys. So we're not going into the deep end, but we need to get into the pool. We need to acclimate ourselves to the temperature, and we need to start, waddling in further and further. Okay. And kind of going into it as we go along. Okay. So next point is dead money. Okay. And of course, questions about any of this stuff you can ask shortly after this, because I want to wrap it up. And like the last time, open it up to you guys. I'm in the process right now of closing out. I'd have to say maybe 20 to 25% of my positions, 20%, I'm bringing it down from about 70 to maybe even more than that, to like 50, 50, a little bit over that. And I've actually made some inroads with that in a surprisingly short period of time. What did I do? I didn't really look at how much has this made for me. I looked at what has this money done for me in the last period of time. And whatever that period of time is up to you to establish. Okay? For me, I tend to look at things relative to how much time is left, how much time was in the original option, and factor all of those things in. So I got rid of some things that hadn't made me any money, some things that were up 700%, but had been up 1200%, some things that have been just slow bleeders. They're just kind of sitting there and they're not making money. They're just a little underwater. There's still plenty of time. So it's kind of like one of those, Come on, just hold on to me. You've got so many stories of those things that you sold. And then in the last month, month and a half, they ran up like crazy. You don't want to get fucked again, but I'm like, yeah, you know what? I got too many of you motherfuckers. I got to get rid of some of this shit. So that's when you start looking at things. And, obviously, if it's something that's on the cusp of going long-term capital gains versus short-term capital gains, that's also something that you consider. There are lots of factors to consider, but if you know what they are, you can plow through them very quickly. You look at it and you go, oh, the stock's been moving sideways for a month. Is there anything coming up? Oh, it's been moving sideways for a month. They just came out with their earnings. They told us all they were going to tell us. It's fucking going nowhere. Why am I hoping for a miracle? Now, have a purpose for why you're going to get yourself out of that position. You either need to have something else that you're going to put that money into, or you need to have another purpose for that money. For me, I've been making a shit ton of money and I've exceeded all the parameters that I thought I would hit. So I now need to start thinking about converting some of my positions into things that will pay me a dividend on a monthly basis, on a, whatever. Now, on a macro level, and I thought about this today, that puts me in a different position from you guys. You're in growth mode while I'm continuing to be in growth mode, but also in preservation and conversion mode. Okay, so right now I'm looking like a lot of people, Disney, all of that. And I'm like, fuck, I've been in that shit for a long time. I'm not adding to that. So I'm not going to advocate for it. Other people may look at it and find value because they're getting in now. They can tell the story, etc. I'm also going to be really focused much more on pushing out to you guys positions that I've been in that I don't think are dead money, but haven't gone a lot of places. They've kind of been flat, where, like, as is always the case, I'm always Apple, and then there can be plenty of others. Today, I like the banks, I think, are still good, even though they've had runs, so that will be my perspective. Also, it falls back to my overall philosophy. I see a lot of you guys, you're trying to find not needles in haystacks, but you're trying to kind of lay claim. I found this, and that's awesome. That's great. But be careful, okay? Make sure that what you find is another big fucking company, okay? Don't find tiny little companies because, again, you guys right now are not necessarily playing with large amounts of money. So if you're playing with like 20 grand and you're thinking about, do I put 2,500 in, okay, I'll say it again, Apple, or do I put it in like Workhorse or, Neo or some other EV something play? My answer every time would be Apple, okay? Because that will guarantee to make you money. The other one, either way. And part of why Apple guarantees is because of its size. It's not a stock that's going to get shorted. It's not a stock that's going to get really pushed around for any reason other than collapse of fundamentals. So right now, the most important thing for you guys is not to find these niche hidden winners. The most important thing for you guys is to put your money into the market and put it in large companies, as I said, really, I mean, before I'd say 50 billion, but that's like freaking nothing anymore. Look at 100, 250 billion even. Some of you may know how to set that up on Street Smart Edge. I don't know if all of you even have that bit of software yet, but if not, that's, an easy metric that you can set up to screen stocks by is just their valuation. The bigger the company, the harder it is for it to get attacked. like a GameStop or something like that, you know. And in today's world, that is becoming a bit more of a concern. And when you're dealing with options, you know, you can be doing wonderfully, but then along comes this kind of shit, and it happens to coincide with when your options might be expiring, and all of a sudden you're getting fucked left and right. So you have to be aware of all of these kind of factors. Okay, so you know, I'm sure I'll jump in and blah blah and say some other shit along the way, but that's what I've got for now. I'm going to turn it over to you guys. And again, since Sasan is our emergency room doctor in residence, Sasan goes first. Go.
All right. Thank you. Well, it's not because I'm an ER doc. I just have to get off the phone. So
Well,
just
you got to go help people.
yeah, I gotta get. So, one of the things I had a question about, you steer away from Amazon because of the big price. I looked into that today, and I just did a pre and post. You know, right now it's, you know, it's kind of just going sideways a little bit, and I think it's undervalued. And I might be one of the people diluting myself with research, but there's multiple different places that I've looked where, you know, a 30% increase in the value in the next year is not unheard of. So that would put it at around, and that would put it at about $4,000.
Absolutely.
If you buy calls at $4,000 for January 2023, it's, you know, you could get, you know, it's pricey, but those things are going to climb proportional to the price that you paid. So, I mean, other than putting the nut down, it seems like it's one of the things that is a sure thing.
Well, you know, I guess the question there is, how big is the nut? You know, Amazon. Okay, let's take a quick look. See.
So you could get for 16 grand, you could get what I described. You could get like, I think it is 2 shares, two
right.
one, or I think it's 2
So
whatever contract. Sorry.
Yeah, $4,000. Okay. The January 23's 4,000 options are currently trading for about, my favorite number of them all, 420. Okay,
Yeah.
that's $420. That's not $4.20. That means
Right.
that one contract will cost you $42,000 for one. Okay, if you want to buy two, that's 85,000.
You're at January 23.
Yeah,
and you're at 4,000.
2023. Strike price 4,000. Bid and ask 416 to 425. Okay. Now, even at that level, okay, to have the option be at about a 10% cost to the strike price is not outside reason. Okay. However, $42,500 per contract. Okay. I mean, for me, that would be an incomprehensible thing. I would never, ever go into something that big. First of all, because even at, you know, without sounding pompous, at the level that I'm trading at, I would never open an initial options position for $40,000. And if I did, shit, I better have like several hundred contracts minimum. You know, I cannot psychologically, in terms of amount of the bet relative to portfolio, you know, justify that kind of.
So you told me that before. I guess the thing that that's why so the reasons that I'm giving. So if it does increase proportionally, and you believe that this company is really, really on track to do well compared to even Apple, then you don't think it's going to do, I mean, it would do as well as
relative to what it is. I mean, shit, they're doing 42 grand. You know, I can buy Apple, you know, I can buy Apple in the money now in 2020.
No, well, that's the point I'm making, is that you could get it out of the money, get get a proportionally larger amount of shares that'll go up a proportionally smaller amount, and you can make the same amount. If both companies perform exactly the same, that one call
Sasan,
would make you. I'm just curious about your thinking on that.
You know me, okay? And we have a lot of these conversations, okay? And with me, I'm just like, listen, that's my call. You can do whatever you want, you know? This isn't about you convince me or me talking you out of. You ask a
I can't
question.
afford it, so I'm not even doing it. But
So then don't waste your time. Don't waste your time in the theoretical. Okay? You know, there's plenty of time to waste in the practical. Don't freaking, you know, don't make bets that are like 1/6 of your portfolio. That's a bad idea. You know, that's a really, really bad idea. What else you got?
Otherwise, there's so the way that I did a couple of things today, I looked at things that companies that are bulletproof-ish historically, like Coca-Cola, that are about to get bad earnings. And the calls on that were pretty inexpensive. I think it was like $2 or something. So that I wonder if that is something, those kinds of companies are on your radar. You've made the 100 billion mark with that company. It's got history. People aren't going to stop drinking Coca-Cola. The thing that actually got me on it is that two people at work on the overnight had brought 12 packs of Diet Coke with them to work, and they drink about 7 of them a day. And I realized that there is a large proportion of this country, at least, and probably the world, that are addicted to it. So similar to being in Colombia and investing in cocaine, this is something like that here.
Right. Well, unlike McDonald's, countries that produce and drink Coca-Cola have gone to war with each other. It might be because of the sugar content, but that's a different story. If you look at, did you look at the Coca-Cola charts at all?
Yeah, it was kind of down, and then it kind of went up a little, and then it's kind of sideways for a while.
That's awesome. That's like, I'd love to have you, as a witness to a crime, because your description, it's like, David Chappelle's thing. I like to tune into the scanner, looking for a black man between 4'6" and 6'3". Like, I don't think I'm going out today. So if you look at Coca-Cola for its 2-year chart, you kind of see that where it was 2 years ago is exactly where it is now. Okay. Coca-Cola is sugar water. Okay. And chips, and shit like that. Very, very thin margin. Products that are not exactly in favor with society, although they're trying. They also have, all the kombucha and whatever shit. But the majority of their stuff is the stuff that causes cancer. Okay. They're not replacing it fast enough. And it's simply, people are just going to drink less of it. They're drinking more water, blah, 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 all of that kind of shit. And yes, I think Coca-Cola owns vitamin water and et cetera. It's a stock that really hasn't gone a lot of places. It's a stock that can have a pop, but that's what you're then buying the options for, because you believe that it'll have a pop. You don't know why, you don't know for what reason, and chances are it'll have a pop because something will have happened that has caused it to drop, and then it's going to pop off of that. If you've gotten into it before it dropped, you're fucked, because it's not going to, it's not going to out rebound. The run that it had last year, I don't know why it ran up to the 60s and hasn't rebounded that much yet. I mean, yes, I do, because obviously restaurants and major places.
Yeah, that's what I'm betting on is
right. Again,
because I think they increased their distribution outside of like stadiums and things like that. So now when those open up, my thought is they're going to sell. It's going to be
not
where they're
not illogical, but and you know what? If you can't find something else, sure, take a shot at it. See what happens for 3-4 months. If you buy something expiring in 23, you've got time. Make sure it doesn't end up being dead money, and see what happens. Same applies for J&J. I'm not the guy to talk to about pharmaceuticals unless they can be purchased on the street corner. Then, you know, we can have a chat. But if it's like J&J and that kind of shit, I don't really know what the fuck, you know, that's beyond me. I might
So
hop on
J&J dropped because they said they had a 72% efficacy. It's going to, once they get this third trial, because it's a one shot, it's going to distribute further, both distance and to population wise, it's going to infiltrate, I believe. So that's the gamble there. You're getting it cheaper. And again, it's bulletproof. It's J&J. It's not going to, you know, they're not going to tank.
Ah, fuck, it says the meeting will end in 40 minutes. I don't know. Okay, but I'll probably reschedule it. Or
I think they just extended you, Vadim.
they did? Did
It
you
said
receive something?
I got a note that said this meeting no longer has a time limit.
Okay, awesome. I
Whoa.
just got a note
How'd
that
you do
said
that?
it got 40 minutes and it was going to end. All right, awesome.
Well, if it does, it does.
Exactly. And then, you know, if you guys want, I can start another one real quick or whatever.
Can I add 2 seconds to the Coca-Cola
Yeah, man. Go.
story?
Yeah.
It's 19 hours.
So, San, I'll tell you the sort of dirty little secret, right? Water, fresh water in our society, right? It's now being traded on the CME, right? It's a traded commodity, right? And Coca-Cola in some of the third world countries and emerging markets, the price of water is more expensive than Coca-Cola in these places where they're not able to reproduce fresh water. So a lot of folks are going to have to make health choices about choosing between the which, and they can't afford real water. So they can't afford the bottled Dasani. So they're going with Coca-Cola on their shelves.
Yeah, there was a huge
But
thing
it's
about
definitely a real.
Did you ever see that? Did you guys ever see or read Idiocracy? Where they
yes, but let's not go off on those tangents.
Okay, sorry.
On those
It's Gatorade though.
Yeah, that's real.
All right, Sasan, good to go with those two. Disney,
thank
be
you.
careful with Disney. You know, J&J, if you want to talk drugs, Irene is a drug person also. She's on the ground with AbbVie and all of that shit. So feel free to connect and, you know, chit chat. And then, hey, bring your fucking ideas back to us. Whatever you come up with, that'd be wonderful. Okay,
right,
who
cool.
wants to go next?
I'll jump in on it with a question. Kind of,
Okay.
I went through the last Zoom call,
Yep.
and I was listening to some stuff about you were talking about how about evaluating trades that are outside of what you have suggested. Not that those are bad trades, but that kind of trying to give us a filter for how to understand it. And so you were talking about how Rob may be able to chime in on some environmental stuff. Irene may be able to chime in on some pharmaceutical stuff. Sasan on maybe some law or some medicine, whatever. And what I'm curious about is all of these people have knowledge about this stuff, but how do we apply what you have kind of talked about is like the psychology? Like, how do we, it doesn't seem like it's just about knowledge in those sects as much as it is psychology about those subject matters. So how do we, like if Sasan comes to us with some knowledge about something in the medicine field, how do we apply the psychology, or how do we apply the vision, the lens that you have to understand whether or not to get into this, to said stock or said option?
I always say this, and I genuinely mean it. Okay. I'm a simple man. Okay. I'm not that clever. If it's really complicated, I lose track. I tune out. I'm not interested. It's got to be simple. Okay. And the psychology of investing truly is incredibly simple. It's essentially, don't be afraid. Don't be afraid. That's it. Like I said at the beginning of this call, no single bet is life altering. It may be if it explodes, but it's not life altering if you lose it. And if you spread the love around enough across a good amount of positions, most will be winners. Most will be winners, because, look, again, that's the psychology. The practical part is, what the fuck are you buying? oh, hey, I'm buying this thing. It's this tiny stock. It's actually like, you know, that pharmaceutical that I sent today, the Swiss, the RLFTF. To be honest, if I wasn't the one who saw that and someone came to me with that, I go, well, you know, I don't know. I don't think I want to do that. But it was also, it's so cheap. It's pennies. I love stocks that when you don't have a lot of money, allow you to buy shit ton of it. And you're like, fuck, I just bought 10,000 shares. It only cost me $6,000, you know, but I've got 10,000 shares, you know? And if someone has 10,000 shares of Apple, you can at least both start that sentence the same way. It doesn't end the same way, but it starts the same way. And that's where the psychology of it is. You know, it's feeling like, you know, like your balls are growing, you know? And that's what it's all about. And your balls grow not just because you make money. Actually, they don't grow that much because you make money. Okay, they grow a whole lot because you not realize, your shit is being validated. You're like, fuck, man, I'm making good calls. It took me 12 years of doing that before I actually felt confident enough to verbalize that. And even now, I feel like I'm going to jinx it. Okay, but I've become to appreciate that as a healthy part of the superstition of investing, because
Like a
that's
line you
part
respect.
of the psychology. All right, cool. What else? You got anything else to add?
Nope, I'm good.
Okay, next.
Can I hop in?
Sure.
So you and I talked a little bit about using margin for investing, and I have a margin line available to me, but all of my current holdings are not marginable. So you talked about upgrading to a level 3 and portfolio margin. So can you talk to me about what that is, how it differs from what I have, and how to use it?
Yes, very good question. And, you know, part of my approach to bringing this to all of you is to not tell you everything at once, okay? Because it can be overwhelming, it can be daunting, it can be like, I don't know if I want to do that. And if that's where we're going, you know, I don't want to go on that ride. So we kind of dip our toe in the water and we see what happens. But it's a very, very important thing. And it was definitely one of those aha moments for me, or as I call them, the executive washroom moment. It's not so much what is level 3 option trading do. It's that in order to have portfolio margin or portfolio insurance, you need to have level 3 option approval. And that allows you to trade things that you should never, ever trade. Derivatives and futures and all of those life-destroying things. Okay, they are an amazing way to lose everything you've lost. And if you ever did that, I just say, that's on you. That was fucking ass stupid. But you got to be able to juggle knives to get the portfolio margin. What is portfolio margin? Portfolio margin is the promised land. Portfolio margin allows you to utilize margin on everything, options, equities, of course, non-marginable equities, whatever you want. And it also magnifies it, because a regular margin account, you get a call when you get to 30%, which is fucking suicidal already. But a portfolio margin account is when you actually start to feel like, so this is what banks do, or at least like local community banks, not like Bank of America. They do fucking really fucked up shit. But, you know, it's just the furthering of leverage and the magnification of that leverage. You know, I had an account that I just opened, and I also placed just option trades in it. I started with $50,000, and I got to the point where it said, you have $262 left. because everything was a non-marginable, thing. The next day, I called Josh and I was like, hey, what the fuck? It's taking too long to get me approved. What's going on? Boop, boop, boop. Bottom got approved. Next day, instead of $262, I believe it was like $65,000. Okay. As that portfolio has gone up, that $65,000 is now $250,000. I don't really know the math. I don't know how much what went up to reflect over there. All I know is I look at the number and I go, okay, cool. I've got that much virtually no cost money to put to work. And that is what happens. That's how, Irina, for you, for instance, if you put like 10, 15 in and you had this, it would show up as $75,000, $80,000. Now, how, is it like, hey, Josh, turn me on? No, it's not. This is one of those things that they're like, we kind of have to see that you at least have a grasp of this to a degree. And that's accomplished one of two ways, or as a combination of the two, and it's time and amount of trades placed, and the building up of your account by putting more money in and all of that. They want to see that you're serious, that you're showing an understanding, that you've been doing the right things, and then they'll let you do it. Until then, they won't. Even though it makes them more money, but at that level, they're, they want to make sure that everyone's doing the right thing, and even with this, even though it's like, well, hey, you'd still be, doing essentially, you'd be guided, you'd be talking things through, blah, blah, blah. They don't give a fuck. They want to make sure it's, legit, as it were. And that's why, I'm like, get more money in there. Let's place more trades. Let's get momentum and all of that. That applies to everyone. Get going, get going. What else you got, Irene?
I have a quick one, and that is, how much validity do you put into the ratings of things like Yahoo Finance or something like that when they talk about buy and sell ratings, or whatever any of the programs that give you ratings on that?
Well, I mean, I thought you were going to say someone like legitimate, like Morningstar or someone.
Well,
like
whoever,
that.
Let's just say whoever.
Well,
Like,
I mean,
I look all over the place.
That's a very, you kind of have to use the right terms, Yahoo Finance, that might as well, to me, it's kind of like Reddit, it's maybe like a Motley Fool might be slightly better, but I'm not. And then you have like legitimate, whether it's investment banks, Morgan Stanley, JP Morgan, Goldman Sachs, etc., Bank of America, or specialty research firms. Okay, you kind of, I give different weight. And I also like that on CNBC, when someone talks, they put out, whether they've got anything going on, their family, anything, any involvement. So that obviously will make a difference. But, just because they work somewhere doesn't mean that they really fucking know what they're talking about. The guy who forever and still somehow is considered the #1 analyst on Apple has been completely wrong on it for the last 2 years, and he goes out and he fucking still selling the same story, and I don't understand. So everything is finding, the guys who say shit that while they're saying it, most people are like, get the fuck out of here. But they're consistent, they're constant, they don't care what anyone says, they stick to it, and they're right every time. To me, that's a guy like Tom Lee of Fundstrat Research. To me, that's a woman like Kathy Wood of Art Capital. I like, then you have big ones like David Tepper, Rick Reeder, today, on the other side, that guy whose tape I sent out, Carson Block, I think his name was, from Muddy Waters. That guy, even though I hate shorts, but that guy is a smart one. And he doesn't come at it from like almost this vindictive perspective of a guy who's been bullied and now I'm going to stick it to those finance guys. You know, so you got to just find your the voices that make sense to you, which is why I tell everyone, get a DVR, hook it up to CNBC, fast forward through shit, see what takes, what doesn't, you know, because if you're getting it from me, I'm, you know, I'm passing along the guys that make sense to me. And I may be missing some, especially if you're interested in different industries, you know, things like that. Okay, cool. We'll move on.
Okay, thank you.
Rob, Ali, somebody. Ali. Okay.
Yeah, I mean, this is just kind of a question, maybe you're not able to answer tonight. And, you know, I've known you for a while, but like the numbers you put
I
out
don't wear
today.
silky undies.
That's, well, I'm curious.
Oh, that's
Thank
not
you.
what you're
Next,
talking- okay, all right. Okay.
that's next question. Question number 2.
Yes.
But you put out the numbers today, started with 10, 12 years ago,
Yes.
8 million now. Is that something that you infused more capital into? Is there a trajectory or bifurcation points? Maybe not tonight, but you could put together that I had 10, I bought this and this. Where were the points where it went from 10 to 8 million in 12 years? And was there any more capital infused from the beginning?
Okay, so I have a gross number and I have a net number. Today's number that I sent out, the 8 million, that's the gross number. Okay, the net number is actually about 7.6. Okay, and the gross number is actually now 8.15 or something. What the difference between the two is the money that I have withdrawn from that account. So over the last 12 years, I've withdrawn about $500,000 for life. You know, I have not put any money in. Okay, I haven't. I used margin. You know, I don't want to say life is timing, but there is, you know, look, to say that there's not an element of luck, I don't know if you call it luck, but I'm in it, I'm aware, I'm, you know, doing shit. So luck, not luck, I don't know. But in terms of, yeah, I started with 10 grand. And the best part is that's 10 grand on January 1st, 2009. March of that year, okay, like late March, early April of that year, I was down to 2,500, you know? And the thing was that 2,500 was insanely leveraged and still gave me a number of positions that then just really accelerated, you know, and that 2,500 several months later was like 20 grand. And then I had more margin, and then I would buy something and sell something and buy something and sell something. And, you know, sometimes it's like, you know, you just kind of have to be there so that everything falls in place. If you're not there, it doesn't have a chance to do that, you know? So that's, again, goes back to my, I don't care how much you have. I don't care what, start and then commit to putting in a certain amount all the time. Life is tough. We go through hard times. We can all make a point to say, I will, at the very least, every week, every month, put $50 in, $100 in. You know, you got to do it so you feel it, you know, not so it's like, you got to feel the pain, because no pain, no gain applies here also. You know, just keep putting it in, keep putting it in. They keep creating ways for people who don't have a lot of money to own portions of bigger stocks. You can own a portion of Amazon, which costs $3,300 if all you have is $50. You know, and you can take that $50 and divide it amongst a bunch of other stocks, all of which can cost over $500 each. And you'll buy tiny slivers. And then every week you'll buy another $50 worth. But you'll see, whoa, the $50 I bought last week has gone up some. Awesome. Wow. So let me see, maybe instead of $50, I'll find a way to put 75 in, and blah, blah, blah. And hey, kids, instead of giving you coins in your piggy bank, daddy's opened up an account for you. Let me show you how to do this shit. Here's $50. Which stocks do you want to buy? Do you know Tesla? Yeah, daddy, it's those cars. Awesome. Let's buy some of that. Apple. We love Apple. We love our phones. Let's buy some of that. And then your fucking kids, by the time they go to college, have half of their college paid for just like that. But you got to be in it. What else you got?
Well, I mean, just as off of what you said, so it sounds like in the beginning there was some bit of day trading going on.
I mean, listen, again, I am not, a guy who I'm going to buy General Electric and I'm going to hold it for the next 20 years. Okay. I'm not that guy. Okay. I'm a guy who buys something and holds it until I don't, until I wake up, until I find something else, until whatever. Okay. Can that happen in a couple of days? Sure. But usually not. Almost certainly at this point, never does it happen. And even then, then what was easy was you could buy Citibank for $1. You could buy Bank of America for $1. It's 30 now. To go 1 to 30 in 10 years, that's not bad. That's not bad. So was that a good time to get in? Abso-fucking-lutely. Everyone had that opportunity, but most people were selling whatever little they had and freaking putting it into a pillowcase in the back of the closet. That was that. That was that. For me, it was like, what the fuck am I going to do? I'm down to $2,500. What, I'm going to take that out? I've got a wife. I've got a kid. I've got a business. What the fuck is that going to do for me? I might as well just see what happens. And that's, you got to be in it. You got to be in it. Everything else is just talking, and whatever. Most people are talkers. Be a doer. Next, Rob and Wendy, since there are two people hiding behind there.
Hey, I got a quick question that I'm going to give Wendy one if she's got one. So my first one is, so one of the big things that's happened with me, I had a small cash position that I've invested. I do have some dead money that I have to admit I haven't spent yet, and I really should spend it because in 10 days the investment I made in options is up 20%. So there you go. And I'm watching that money sit there and go, what am I waiting for? So right. I'm going to make a move on that this week. But the bigger question really comes down to, and I know it doesn't really matter, but it is retirement money, right? So it's, or actually tax deferred. Let's just call it that. Yep. So it's a different pool of money. I'm not going to draw income off of it now, but of course I want it to grow.
Right.
So that money is going to be rolling in. And here's my basic question. So right now it's really divided up between mutual funds, right?
Yeah.
And some hard stock.
Yep.
More TI stock, I should mention. I have a shitload of TI stock, which hasn't been bad, but whatever.
Right.
So when I bring that money in this week, and this question relates to Wendy too, because she's got some money she's rolling over as well. I guess question number one is, since it's tax deferred and it's retirement, number one, would you take a different approach to it? Is the first question. And then the second question is, that approach is kind of the traditional approach, equities and mutual funds in retirement savings. I asked a similar question to this last week, but I mean, I want that money to grow as well.
Right.
I guess my question is where I'm at now, having just gotten into this and already beginning to recognize the recommendations you're making, is how do I break that? How do I diversify that portfolio in a way that provides some growth, but also provides some long-term security for me?
Right on. And I'm more than happy to have a fuller conversation than this,
Sure, more detailed, but just in general, I think everybody would benefit from maybe hearing this.
This is okay. When I try to cajole, trick, or otherwise get people to do stupid shit with their money, this is what I basically say. I say, okay, and we'll just use hypothetical numbers. Okay, you've got 500 grand in your retirement account in a mix of stocks and mutual funds and all of that. Awesome. That's fine. Let's keep 450 of that in that. Okay, we're going to take 10% of that, and we're going to have that be the risky part. Okay, as it were.
Right.
And we, make well-reasoned, well thought out, well argued bets with that 50 grand. Okay. Probably maybe up to as many as 10 positions,
Okay.
Because I prefer to have everything make you money rather than 1 out of 4. Okay. And when you buy more, you actually end up making more. Everyone thinks that, if I just have that one, that's going to be a monster, yeah, but it's fucking hard to find. It's easier to find a bunch that all go up some and blah, blah, blah. Okay. What happens then is they start going up. Okay. And this happens every fucking time. The other person contacts me and goes, so what do you think? Do you think I should put like another 10% in? Maybe leave like 400, but put another 50 in. And then I have a conversation because I knew this was going to happen. I knew we were going to have this conversation. And, down the road, everything, of course, age and all of that, you have to weigh all of these things. Do I believe that if I told you right now, Rob, take that $500,000, and yeah, we're going to let it ride. Okay. But we're going to let it ride in companies like Apple, Facebook, Amazon. We're not letting it ride on, bullshit. But yeah, we're going to do options and all of that. Yeah. That you would make money.
Yeah. It's just a different pool.
But I wouldn't do that because that's not your comfort level. That's not how you want to start off. And whether we get there, we'll see, but that will be driven by you. So, if anyone, basically for me, the benchmark is around $250,000. If you've got that or more, let's start with the 10% and, work our way up from that. If you have less than that, it's kind of like, use what you've got. Okay. Again, if you've got like 20 grand, it's not like, okay, we're going to take 20 and put it on black. We're going to take that 20 and maybe not 10 positions, but like 7 or 8 positions, and we're going to let that grow. And once you start seeing it grow, you will find ways to be able to put more money in, even if it's $50 a week or whatever, because you will see and you will want, and it will happen. Things perpetuate. Vicious cycles versus virtuous ones. I like to be in the virtuous ones. What else you got?
Okay, second question, and I've seen this and I haven't asked the question, but I'll ask it here in case anybody else wants to know. So we can buy options in equities, but I also know that you can buy options into funds.
Yes.
Can we talk about that a little bit and explain that to me? And
I mean, it's exactly the same thing,
it's just a group of stocks.
Yeah, exactly. I mean, it's an ETF is a symbol. A stock is a symbol, some do, some don't. The Bitcoin thing that some of us are in, it doesn't have an option, for whatever reason. And that's decided by the people who create the ETF, and also the people that own shit tons of it, they can then create margins on what they do. It's hardly ever people that do that. It might be like a hedge fund or, or maybe super crazy wealthy people, shit like that. But yeah, it's essentially the same thing. And just like a stock would have a PE, ETFs have PEs. They just, incorporate whatever they're invested in and whatever fractional factors are applied to each of those, and they figure out the same kind of metrics that apply to any stock or anything else like that. What else? We'll move on Isaiah, what do you got for me, my man? Or for
Well,
anyone else, for that matter?
so listening to just really quickly on information, right? Because information is currency in our time,
Yep.
right? Irene was talking about, where to sort of check stuff out. I use a website called Guru Focus, and Guru Focus, it's great for, it lists all of the top money guys, hedge fund managers, the top dogs, and it
You
lists
got
all
you
the
got a
different-
premium subscription to that you can share the login and password with all of us?
And I'm using the free subscription right now,
Ah,
okay, but there is a premium option.
right,
I'm not here to, push them. I get no points or any.
right. No, but if it's good, we could all use more information.
Yeah, totally.
If it's something that works for you, I mean, there's also information overload kind of thing.
100%.
But, if it's something that works for you, you find something that's interesting. Like I said, with the group text message, I push shit out. But, if you post something, and, I actually have not.
It's 1930.
I need to do that better because I get a lot of stories that have been sent to me, but I don't share them with the rest of the group. I kind of respond to them as if the person who sent it to me was like, what do you think? So I'll respond to them on that without really thinking, hey, maybe the rest of the group would find this useful. So maybe what I'll do is like once a day, I'll send out a text message with a bunch of links to a bunch of different articles. So it's not a constant barrage. But I don't know if that was what you were talking about, but more information is always better.
Yeah. I'm not sure. I just felt like maybe that might be useful. Just, as we're defining our own personalities and our own trading styles and comfort levels and
Absolutely, man.
what the big guys are doing.
Just like with what I send out, same with anyone else. We can read it. We don't have to read it. We can do something with it. We don't have to do anything with it. It's all up to, everyone with their own life filter and everything else.
Isaiah, what was that again? What was the?
It's Guru Focus.
Guru Focus.
Guru, like your guru.
Right.
Focus. Yeah. And so for my personal question, for our guru here, I've heard this saying before, right? Pigs get fat and hogs get slaughtered, right? So when we're talking about options, are you at all paying attention to your AROC? And is it going above?
According to my what?
Your annualized return on risk capital. Like there's a percentage rate when, you're sort of.
Isaiah, I'm a simple man.
Okay.
With simple things.
Okay.
I don't know what the fuck that is. Am I what? Am I worried about how much money I'm making?
Well, just in terms of the risk relative to what you've put in on any particular position, and there's a percentage there, and are you at all concerned about that?
Great question. Great question. Is there any individual position that I'm feel that I'm out of bounds on, that hey, it's time to whatever? I look at it this way. As I mentioned, when I get into a position, I'm looking for a double. I'm looking to make 100% on it. That's kind of my minimum benchmark.
Yeah.
Okay, so until I do that, I kind of hang out in it, and if I find something else, and if I need to sell that because I don't have other funds, then I'll sell whatever. But fortunately, because of the portfolio margin and everything else, I can hang on to whatever and buy whatever. So in terms of that, I don't really, it's never too much and it's never too little. I had something that was up 1,200%. I forget which one it was. And then, it was up 700%. And I was like, you know what? This isn't a position that I'm gonna miss. It's not a position that I'm like so excited about. It's made me more money than I thought it was. I think it was Blink or something like that, So what the fuck? I'm out, because it's a position that, you know, shit, things that go up 1200%, you're going to have to give back some of that, you know? And it's just a matter of at what time you wake up and say, whoa, I don't want to give all of it back, because I've had that happen also. So, you know, I look at my portfolio not as individual things. I look at the number. What am I up? What am I down? I'm up. It's working. I'm down. Maybe it's not. On days like today, when virtually everything was working and the market was up, I look to see what's not. Today, for me, Workhorse wasn't working, you know, and everything else was. And I'm getting tired of waiting for Workhorse's US, the Postal Service thing to come out, blah, blah. But I've also made several 100% on it. And it's like my second or third time in it. So I'm like, you know, but overall, my portfolio is going up. So I don't feel pressed to get out of it, you know, but I know there's no effing way I'm going to hold it long enough for it to roll over into long term, you know? So I know that's not really an answer, but in a way it is, because it's like, as a person who's been doing this, you know, you know that nothing is ever written in stone. You know, there have been so many times when I've texted people, that's it, I'm getting out of this position. Fucking, I'm out. Okay. And they will act on it immediately. And then a couple of weeks later, I'll be like, hey man, are you still in that? And I'm like, no, you got out of it. I'm like, well, you know, because who knows? I'm out. Phone rings. I get distracted. I forget. It's not even that something changed. I forget.
Sure.
You know, it's that simple. Life happens. But as long as throughout life happening, you're focused and you're in it, then it's all good. You know? Okay, let's go around again. Anyone else have anything else?
Hey, we got to
Just one
jump
thing.
bottom.
Okay.
Yeah.
Well,
Okay.
thank you. Thanks so much.
All right, guys.
Can I just ask, can you manage that risk with a stop? Like what Isaiah was talking about, if you set a stop price, like that's what I've kind of done. I have a couple of things that have gone up more than I expected them to. I don't want to pull out because who knows how much runway it has, but I set stops on them for where I would like, where if it hits this bottom, I get
Right.
left enough room for volatility.
Right.
You know?
You know what? For me, it's like I use stops very infrequently, and I use them when it's really like a head fake that for some reason, even though I've really made the decision to sell the stock, I'm just not willing to somehow say that to myself. So I do the stop thing. And then inevitably, the stop gets triggered. And you know what happens as soon as that happens? I'm overwhelmed with regret. You know?
Haven't had it happen yet.
Fuck, I should have. In the past, I'd be like, fuck it, I'm getting back in. And that's when you lose. And it goes, motherfucker, shouldn't have done that. So I've learned from that is if for whatever reason I put the stop in, I'm in, you know? The dumb thing is sometimes I'll be so out of the position that I'll put in a good till canceled order. And because I have so many symbols in my portfolio, you know, I won't even notice it because I know where the big positions are. So I'll scroll to them to see how they're being affected. And then all of a sudden I'll get a thing. Oh, your position was on. I'm like, what the fuck? What? You know, so I mean, I understand it. And especially since you have a day job and children and everything else, you know, all those things that I keep giving you shit about. Put the kids in the closet.
Yeah, you're like, they'll be fine. Just leave them alone. I'm like, no,
Throw in a hunk of
they're gonna
bread.
die.
Exactly. You know, it's you have to look at everything. If you're up, you know what? Even though I hate this expression, but it's true. No one ever lost money. No one ever lost taking a profit. You know? So, yeah, if you're up, a lot, you know, have that trailing stop. You know, maybe give yourself a bit more of a cushion in it. You know, be willing to have it drop lower because
Yeah,
you're
I
still
personally
down
said a
several
30% point.
100%. Fine,
Yeah.
fine. You know, do that,
Okay.
because at that point it's run up so much that you're not considering buying more because that would
No.
destroy your
Yeah.
average cost. So
Yeah.
you know, you're not doing that. You
Mhm.
know, so yeah, so do that.
Okay.
Cool. What else? Isaiah, anyone else? No? Okay, cool. A little preview for the next one. The next one I'm going to try to do on Sunday because I really want that to be the day because hopefully it's easier for everyone. And because at this point, yeah, it's still kind of about me. What I'm going to do is basically just go through my positions, specifically focusing on the ones that I think still afford good entry points. You know, that I've been in them, but they haven't really gone anywhere. So, hey, you can even get it either at the same price or cheaper than I paid. And this is why I think it's a good thing. Again, you can think so. You don't have to. You can do whatever the fuck you want or not do anything. Okay. That's also going to be a forum for you guys. If you have a couple of things, get ready to whip them out. Okay. But again, and yeah, it's my house, so I get to make some of the rules. No obscure bullshit. You know, no tiny little fucking pinprick of companies that, oh, it's this thing, you know. I don't want to hear about Nikola when they're trying to sell a bunch of bullshit to everyone, you know, because that's what a lot of them are. A lot of these SPACs are going to blow up. A lot of these other things are going to, you know, but like a lot of the big boys are saying, hey, let's dance while the music's playing. You know, never forget that. Money can't always be made. So when it is being made, fucking fire it up. You know, fire it up and go get you some. Ali, we have found a path. I think you saw my text, right? You may have seen my text. So we can do all of those things. Okay, so we're all good. Ali, you and I should chat like maybe tomorrow or whenever. 10 minutes, open your account, get the ball rolling. Okay? And then we'll figure out the mechanics. Again, anyone else, if you want to have a little sidebar, just let me know and we can set up a time for that. Isaiah, I don't have your contact. My phone number is.
I just texted to
did.
you.
Okay. Oh, you did. Oh, okay. All right. Super. I got it. Awesome. Okay. Cool. So off we go. Sunday, 6:30ish. See you then.
Thanks, Vadim.
All right, guys.
Bye, guys.
Love ya.
Thank you.
Take care.
See you soon. Bye.